Good evening, and welcome to the third installment and the main event of our three-part speaker series on financial security for Knights of Columbus Insurance members, their friends, and their families. In part one of this series, we discussed three ways that prudent investors use life insurance. In part two, we discussed life insurance beneficiary mistakes that you'll regret and how to avoid them. You can contact your Knights of Columbus agent to obtain the workbook from these sessions or a recording of these sessions. And you can also discuss how the topics covered may affect you and your loved ones. Tonight's session is part three of our series featuring Jim Ruta, who will be discussing how to avoid essential financial insecurity during the pandemic. Our financial security has been challenged by the pandemic, COVID-19 in general, and tonight we hope to share some concepts and ideas that will allow you to regain some of that security and peace of mind. Good evening. My name is Sonny Sangemino, and I'm a Knights of Columbus General Agent in Ontario and Canadian Agency Executive Consultant for Canada. Today, I'm delighted to introduce to you my friend and life insurance expert, Jim Ruta, who will be discussing how to avoid essential financial insecurity during the pandemic. Today, we have a very practical presentation on how you can mitigate some of the most common concerns that are affected by eventualities such as COVID-19. Our speaker, Jim Ruta, has a deep understanding of Canadian insurance and retirement funding strategies. He was also a successful life insurance advisor and executive manager of one of Canada's largest insurance agencies. Jim is a well-known advisor, coach, and best-selling author of books like Master Your Money Management and Don't Worry, Retire Happy. Phenomenal book. Pick it up. I own it, and it's great. He is also a faculty member of the Canadian Initiative of Elder Planning Studies and is the Canadian ambassador for the life insurance educational nonprofit, lifehappens.org. Welcome, Jim. Take it away.
Hey, thank you very much, Sonny. Always great to be with my brother Knights across Canada and certainly across the West. I come from Winnipeg originally, and Winnipeg will always be home to me. And my mom, who is going to be 97 on her next birthday, is still doing well in Winnipeg. So delighted to be with the Knights, with you, Sonny, and with the rest of the organization today. Look, this topic we've got today, how to avoid essential financial insecurity in the pandemic, I think is an important one. And you know, the interesting thing about it is that it's what I like to call simple but not easy. Sort of like, you know, and I kind of drag these little horseshoe trick out that I'm sure many of you have seen, especially those of you in let's say Alberta on the prairies. Gosh, this is horseshoes not that rare up there. But you know, the thing is really, you know, it's like financial security is kind of like getting this ring off this little trick. If you don't know how to do it, you can spend a lot of time just swearing at it, frankly. But you know, when you know what you're doing, when you know how to do it, you can make it happen. As simple as that. And in fact, you can put it back together again too. And that's really the thing today. We want to show you how to take this apart and put it back together so that you can have the essential financial security that you really deserve. And especially right now during a pandemic, which apparently is going to be the perpetual pandemic, at least in Canada. It doesn't seem to be wanting to go away anytime soon. So you may be asking, what happened to our essential financial security? You know, pandemic job uncertainty, income uncertainty, health uncertainty, market uncertainty, and standard of living uncertainty are all causing consumers to suffer what I call essential financial insecurity. More of us are worrying more about what happens if. What happens if? So when we don't have basic financial certainty in our lives, we have financial insecurity, and no one wants to feel that way. The pandemic has really laid bare the important gaps that many people have in their financial security safety nets that makes them susceptible to financial disasters of several kinds. It also demonstrated the need to be prepared for anything at any time. Now, especially during the pandemic, most people find it very important to address their financial incompletions, as a good friend of mine calls it, your financial incompletions. These are the things we were gonna get to, and I was gonna make that happen. And boy, one day, if I only got around to it, that sort of thing. But the pandemic reminds us that we all need a secure financial safety net to protect ourselves and our families and even our businesses in the event of a health-related financial disaster. You can have that good feeling that you get from knowing that you have protected all the most important basic financial concerns for yourself and your family and are as prepared as you can be. It really is essential financial security. You know that you've controlled the controllables, you've insured the insurables, and you know that you can sensibly take on the rest of what life may have to offer. It is the peace of mind that equals quality of life, as a friend of mine in Colorado told me one day. And it's so true, isn't it? Peace of mind equals quality of life. It's really why I love the Catholic Mass. Because of that one, there's so much to love, but that one part about, when we offer each other a sign of peace. I think initially I kind of thought it was goofy, but as you get older, you realize that there's nothing more important than that peace of mind. Of course, the peace of Christ, probably the highest level of all of that. So the good news is that with the help of your advisor, your field agent, you can reduce this financial uncertainty and build your peace of mind up. You can even reduce or maybe even eliminate your financial insecurities by following a simple new approach that I'll talk about to financial incompletions and implementing some very simple product strategies. Now, the pandemic has led many consumers today to focus on the essentials for their family financial security. Financial basics are very in these days, and what was often left in the past to another day, has a new, much higher priority. And a prime example here, and maybe some of you have taken advantage of this, is wills and powers of attorney. Estate lawyers, frankly, have been swamped during the pandemic with people who want to ensure that they protected their families when, God forbid, something extraordinary happened. And the uncertainty of the times is driving prudent consumers to handle their financial incompletions immediately so that they regain or reinforce their essential financial security and recover their peace of mind. The pandemic has changed essential financial security priorities forever. And that's not a bad thing. Look, the pandemic, not good, but doing these things is good. Absolutely true. See, I think we have a complication problem, though. The trouble for many consumers is that financial planning has become complicated, maybe even very complicated. So complicated, in fact, that many people avoid it altogether, and that delay only compounds their potential security problems. Now, this is not to say that there are not complicated issues in financial planning. Of course there are, and it is necessary to handle those matters with competent advisors of all disciplines: legal, accounting, estate, tax, and insurance. And your financial advisor, through like the Knights, your field agent, can help you find those people, perhaps even quarterback that team for you so you get that best advice you really deserve. And when you have a complicated situation, of course you do well to address them, but the best help you can find. But what of the essential financial security that we all need for ourselves and our families and our businesses even, regardless of how complicated our individual situations might be? What about financial security basics for families? And honestly, when you think about it, is that people who have financial security problems are not failing because of exotic reasons. They're failing for simple reasons. They have this potential insecurity because of some basic things that they can fix. You see, professionals are family people first. Business people are family people first. Executives are family people first. So how do we get the people, how do we get the help we need when we want it? In an overheated priority world like we have today, time is of the essence. And that's important to recognize in this business. And I think the pandemic has really underlined that for all of us, because we see that, sometimes we just don't have all the time we might want. We all have a home base that needs to be covered. And when we do that effectively, we have essential financial security, meaning that we are protected from unexpected personal financial hazards as best we can be. We know we've insured the insurables, as I said before, those insurables in life. And there is a peace of mind in this that enhances how we experience the rest of life. And we know this to be true as well, that when we have peace of mind, the rest of life is more enjoyable for all of us. Tending to essential financial security is the first step for anyone of any background who wants to protect their family's lifestyle and their legacy. And which father, which parent, which business owner doesn't want that for themselves, their families, and indeed maybe their employees and their key employees? The pandemic has shown us the unpredictability of life, and that requires moving the financial planning we do strategically. We have to readjust where that is. And this is a big deal in this case, in my opinion. It's a very important consideration. So this new approach to financial planning reprioritizes the financial plan as it fits better, so that it fits better, rather, into financial security for everyone. You see, I believe that we must all plan while protected and not plan while exposed. And here's why. When everyone knows anything can happen at any time, like we do now after more than a year in the pandemic that came unannounced, of course, we need to be protected while planning. Handling financial essentials first means that you are protected so that you can plan in safety. And that's the thing. You don't want it. You get this backwards, you can cause yourself lots of grief. You're planning, hoping to do the right thing one day, and then the thing you were planning against happens. And that's not the way we want this to be. It's not the way it needs to be, the way it has to be in your situation. So lately, financial planning has been set up by some as the very base of financial security. And of course, that does make some sense. Of course, it seems that you plan a house before you build it. And that's what people say. But do you plan a house before you have the financing to build it? I guess you can, but nothing will happen. The money to build is essential to actually having a house. You see, there is always time to do complicated planning work, because to have to do the work that really has no uncertain expiry date. See, retirement planning, investment planning, this stuff can always be done. There is always time to do the investment planning. There's always time to add those financial extras that add to our life and our lifestyle. But there is not always time to protect yourself and your family with life insurance products. You know, money may pay for life insurance, but it is your good health and your character that actually buys it. Money may pay for it, but your good health and your character actually buys it. Oddly enough, and this is an interesting thing, we all have an unknown expiry date on our life insurance product opportunity. One day we cross a line and we can no longer buy any. For me, I know exactly when that was. It was 12:41 p.m., Sunday, July 11th, 2010. When honestly, when my heart stopped in church, I was standing with my wife, holding her hand and my daughter's hand. I was saying the Lord's Prayer when I felt terrible, and I collapsed in church. My heart stopped. I went from being entirely insurable that day to entirely uninsurable that day. Like that. And as someone said many years ago, you know, we're all just one heartbeat away from immortality, just one heartbeat away. And the only mystery in life, he said, was in the length of it. But we're all just one heartbeat away from immortality. And here's the thing, when it's over, it's over. And we don't get another chance. We never know. One day we do cross that line of insurability when buying is in the past. We are all just one heartbeat away from immortality, and time really is of the essence. That's why we must prioritize the financial plan. And that's why your advisor, your field agent, can talk to you like that about the things that are important. We all know people go to sleep and don't wake up. We all know people with problems. And this is not to hope or wish any of that. It's just, we're just not sure. Only God knows when our time is, when our time will come. It's just been underlined. This worldwide plague has just really underlined what it really is like for all of us. So we can actually describe this revised pyramid in a simple three-part pyramid. And taking from some reporters on US television, I've taken to actually drawing this out. I'm very crafty here. I want to show you something very simple three-part pyramid. And you can see that here. And even if you can, it's only three parts. You've got the basics are the essentials to financial security. You then have the financial plan in the orange and the extras in the pink at the very top. And that's the order of things. You see, the essentials here are the basics. They're essential to maintaining our standard of living in the face of foreseeable and defensible situations. That's what this is about. Then the plan. We'll go from there. But that basic stuff includes the products that bring us peace of mind, bring our families peace of mind. Term life insurance to protect our families' income, so income continues even if we don't. So our dreams live on, even if the dreamer does not. You see, cash value life insurance. And indeed, isn't this one of the great qualities and the most extraordinary products that the Knights of Columbus Insurance has? And you got to know, and you must know by now if you've got a field agent, I mean, the Knights of Columbus Insurance, #1 ranked company of all of them, and there are hundreds in North America, #1 ranked company. And you're putting your money in that organization. So it might seem like a small organization, but it is mighty, a mighty organization. So term insurance to protect your family's income, cash value life insurance to build non-correlated fixed income assets, income replacement insurance in the event of accident or sickness. How critical is that? I mean, that was one of the things that I built my entire career on, going back into the 80s and 90s. And then, of course, powers of attorney, wills, cash in the bank, TFSAs perhaps. So whatever you think is essential to your long-term security, that's what we're putting here in this basic level first. It's the first thing. This is the change in the way a lot of people look at this. Maybe the way you've looked at it, but it's different. But it means you're planning while protected. If I plan first and I have all these essentials exposed, my life could change in a heartbeat. And then what happens? So, of course, the financial extras are those additional products that can enhance our standard of living, like RRSPs, investment real estate, vacation properties, investments, precious metals, art, coins, maybe even cryptocurrencies. God forbid. Sorry, I'll never get used to that stuff, to be honest. So to be protected while planning, the financial plan is best placed between the essentials and the extras, so that you add the extras to the essentials in the most effective and efficient way. And that's what the plan does. You see, this is a very simple, very common sense, basic approach. And more importantly, this process protects you while planning so that you can plan with peace of mind and do an even better job. You're not rushing, you're not worrying, you're not concerned about what could happen. So you really do want to plan well protected. And when you focus on the essentials first, you will help build that peace of mind that really is your quality of life. And after all, that's exactly what financial planning is all about. So financial essentials can be really whatever you want them to be, but generally they are those products and strategies that make us feel safer and more secure in our day-to-day lives. They are our financial foundation, and they give us the money our families need for the emergencies and the opportunities we experience in our day-to-day lives. They are the basics that get young people started and keep the rest of us safe and secure right until far to the end of retirement. Now, this is the point I want to make. The essentials do not require extensive and expensive planning to implement. Only the desire for that security. You see, if I want to take care of my family, I can just do that. And I'll show you here in a second exactly how that means, what I mean by that. So starting with the essentials, and especially in the new financial reality we've experienced, from 2020, that makes existing plans better and creates stronger new plans where none exist today. So here's why starting with financial essentials like these makes sense for most people and how they eliminate financial insecurity. Now, I should say for most people, because honestly, nothing applies 100% to anyone. There's a story in the medical business, if you're a doctor, for instance, they say that a prescription without diagnosis is malpractice. Prescription without diagnosis is malpractice. And that's why you want to work with an advisor, your field agent, who can help you understand what's right for you in your world, with your money, with your family, with your business. That's what's important. Now, let's get started. So no plan is required to build up a savings account, for example, in the bank where you can have ready cash in the event of an emergency or an opportunity. And those things come up all the time, of course. Financial and insurance advisors, oddly enough, have been telling people for decades, and certainly for the 43 years that I've been around, that they ought to have between 6 and 12 months of income in the bank as an emergency fund. We've been told that. You might have been told that. Maybe your mom and dad told you that. You know, we've planned emergency funds like those into our life insurance programs too. Well, we build that in. And yet, as our current worldwide financial situation starkly highlights, few of us, very few of us, are prepared like we ought to be, but we can. And frankly, honestly, 6 to 12 months no longer seems sufficient either, does it? Now that we're into the second year of a pandemic. You know, today the number is probably more like 12 to 24 months. And honestly, 2 years ago, who would have said that? I mean, yes, there are very tight folks who are very concerned about money that might have, but for the majority, we would have never thought that. But now we see that anything is possible. So you don't have to plan to have that sort of savings. You only have to want to have it. And you only have to want the security and certainty that it provides, and then actually do it. So waiting for a plan before you start just slows down the growth of the plan due to lost compounding. That's what Einstein called the eighth wonder of the world. And it's an important, absolutely vital part of this business, allowing compounding to work for you. That's having money in a cash value life insurance contract, money in a savings account, money in the bank, even at small interest rates. It's compounding. It's interest on interest. That's compounding. Interest on interest, and then interest on interest of interest. That's compounding. And you listen, and my dad told me this many years ago. He said, you don't mind having compound interest working for you, Jim, but you don't want it working against you like it does in a loan. Remember, he says, I hate having something eat while I sleep. My dad was a gas, God rest him. So having a nest egg in the bank keeps peace in the house and provides confidence in times of trouble. Now, similarly, life insurance as a risk abatement product does not require detailed planning in most cases. Basic needs can legitimately and compliantly, this is following the rules, follow a multiple of income formula. Now, remember, life insurance proceeds are tax-free, but the income from it is taxable. Now, you should remember this. There are exactly 4 tax shelters remaining in Canada. I noticed that the federal government didn't go after tax much in the last, they just keep on spending. God bless them. But there's taxes. What do you think? They're going to go up in the future or go down? Yeah, they're going to go up, no question. But there are only 4 tax shelters left. Here's what they are. Number 1, your principal residence, at least so far. Let's talk about that. Principal residence, number 1. Number 2, your lottery winnings. So if you win Lotto Max and you win 50 million, cash, tax-free. In the US, 30%, whatever it is. Here, tax-free. Principal residence, lottery winnings, TFSAs, number 3, very important. And TFSAs have taken over from RRSPs as the most popular investment so far. And finally, the last tax shelter, just cash value life insurance. And so the question for some people is always, I wonder how much that evil stuff I have to actually have to take advantage of it. And maybe it would make sense for us to know more about it. And I'll talk about that in a second. So similarly, so here's the deal. So given a possible 5% income environment, the math here in terms of how much insurance you need is rather simple. 10 times gross income to allow for tax on interest income, you always use gross numbers, provides 50% of your income for survivors. 15 times gross income provides 75% to survivors, and 20 times gross income provides 100% of income to your survivors. Now, so does 100% seem like a lot for the family? Well, it won't be, I promise you. You see, setting aside the pandemic for a moment, generally, many people routinely spend 100% of their take-home pay and then some. And that goes on a line of credit, maybe a home equity line of credit or a credit card. Another consideration is that if your family can't get 5% on their guaranteed investments, the needed insurance numbers go up dramatically. Frankly, 20 times is a very good planning number. I've got a friend in Southern California who has done extraordinarily well by his clients by using a simple 20% formula. So is 5% a good number to plan on for income from an insurance payout? Well, I don't know. You can't get that at a bank at anything. My father-in-law, God love him, has a lot of dough. He can scarcely squeeze 1% out of a bank. Experts like Morningstar peg the true value of what you can draw on from your assets if you want to preserve capital, not eat away at the money you've got in the bank, at only 3%. So for sure, 20 times at 5% is not conservative. It's really a minimum. And you think about that, and that's why we talk about a lot of term insurance on cases like this, especially in young families, some of your children, perhaps even you. So here's the point. No one really knows when they will need all of this stuff, the protection or what will happen, because nobody knows what's going to happen in the economy until then. Now, the truth is you're going to be wrong anyway, because no one can foresee the future. So the question is, do you want to be wrong so your family wins, or do you want to be wrong so your family loses? And you can choose at the beginning. You know, once we have the survivor's income amount, we then add to that current debts, maybe the mortgage, other capital needs, final burial, funeral, and medical expenses, plus your terminal income tax return costs, whatever the terminal tax is. And nobody gets away without having a final terminal tax return certificate saying, thank you. The government says, thank you for squeezing the last penny out of your estate. And we've got it. Honestly, the truth of it is this. If you think, you think your family is just your primary beneficiaries to your estate, it's because we forget about the government. You could have a picture of Justin Trudeau on your credenza at the office as one of your beneficiaries. I know that may be not the best idea, but that's the way it really turns out to be, is how that goes. So, that's what we're talking about: cottages, investments, RSP leftovers. It turns out the second person in a couple is passing away, leaving a ton of money in their RSP. And that money is eaten up approximately a half, depending on the jurisdiction, to tax. And you can keep that away from the government with some life insurance planning. So we can reduce whatever amount we total that up with by the current coverage you've got, and you've got the amount you need to do that. And so to do it only requires an understanding and appreciation of the protective value and importance of insurance to the people and the things that matter most to you. Now, I think it's important to remember this. Life insurance is not a need. You do not need any life insurance in any ordinary sense. And what do I mean? Here's what I mean. Look, honestly, you don't need any. There's no law that says you have to have it. In every jurisdiction we talk about, you have to have car insurance. You need car insurance if you've got a car. But there's no rule in Saskatchewan, in Vancouver, that says, if you're married and you have 3 children and you're 50 years old, you have to have X amount of life insurance. There's no rule. You don't need anything. It's not about what you need. It's about what you want. We protect people because we want to protect them. So life insurance is a want. What do I want? And if you want life insurance, you want it now, because tomorrow is not certain, as we all especially know well today. So life insurance is an essential need, because when you lose the ability to buy it, it usually doesn't come back. Or if it does, it'll take about 5 to 10 years before the company will say, well, maybe things have gotten better. We can take a chance again, right? Now, you say, well, Jim, there's TV insurance. Doesn't matter who you are, we'll sell it to anybody. Yes, that exists. Do you suppose it's cheap? No, it's not. It's very expensive. Why? Because the chances of dying when you're in that kind of category are a lot better. And this stuff costs more. So like a parachute, if you need life insurance and you don't have life insurance, you'll never need it again. I always like that story. Life insurance is like a parachute. If you need a parachute and you don't have a parachute, well, you'll never need it again. So advisors initiate and then help a person decide how much protection they want to provide. Term or terminating insurance, or whole life or lifetime insurance work here depending on how long a deal you want to make with the insurance company on pricing. A rate that applies to all of your life is logically more expensive than a terminating in 10 years rate. right? So term insurance is usually for short-term tax-free cash at needs death, short-term cash at death needs, rather, my goodness, like survivor's income. It provides tax-free cash when you need it most and you have it least. It creates an estate. It creates cash even after only one payment. Boy, the return on premium is extraordinary then. And it's vital for essential financial security, but it's an expense. All you're left with after many years of payments is a pile of paid invoices. But it does the job it's intended to do. It's like car insurance that way. It's all you get from that either. The security of knowing you can drive and you're protected financially in the event of some sort of accident. And life insurance gives you the security of knowing that in the worst case, the people you love will have the security you want them to have. And that's the surety of providing security. Now, there is also life insurance that provides long-term tax-free cash at death. And it comes to life when you are gone to pay for those needs that you leave behind whenever needed and regardless of how old you are, right up to age 100, 105. My uncle passed away. He was 104 outside of northeast of Winnipeg a few years ago. So these are final expenses, capital gains tax, special bequests, philanthropy are a few of those kinds of needs that never really go away, and we need to pay. This essential means that no debts you created while you were alive will last any longer than you will. You will also have the security of knowing that your family will not have to lower their living standards to close the book on you that final day. So what if you are approaching or appreciating retirement? What about that? Could you still have a want for insurance? Now, research shows that for decades, frankly, that retirees have three major fears. And I can tell you, as I'm approaching that age, not that I'm going to retire anytime soon, but these fears do come up as you get to that age. Number one, will my money last as long as I do? Sort of the question being, will there be life at the end of the money? And number two, will my life have mattered? Will I have made a difference? And three, will there be any money left over to leave to the people I love? Will I die twice, in essence? Our Jewish friends have this bit of lore in their lives, that you die twice, once when your physical body leaves us, and the second time when people stop talking about you. So will you have to die twice when people forget about you? Life insurance can eliminate those fears and let you retire happy. So whole life or permanent insurance also has another long-term guaranteed capital building function that is beneficial in a financial foundation to guarantee an asset in the event major health and financial events like we have experienced recently happen. I call this long-term tax-free cash for life. And it's really like becoming the beneficiary of your own life insurance policy while you're still alive. The power of a life pay participating cash value life insurance policy to build a guaranteed cash value that can be determined literally decades in advance. You can see this in black and white from 30 and 40 years from now. It's a special fixed income security asset, like buying financial independence on an installment plan. Special insurance dividends add variable growth to the guaranteed values in the face amount of these participating plans over time, making them especially valuable as they get older. And the returns on these contracts, honestly, they kind of look like the compound interest graph, which is a graph that kind of goes flat and then goes like this at the very end, kind of like a hockey stick sitting on its back on the ground, kind of goes like this and then boom, it goes straight up. The key thing to remember here is that when you buy that sort of insurance, you get back every single dollar you put into a cash value plan. It's the one plan you're guaranteed absolutely to take advantage of one way or the other. So it doesn't matter how much it costs, you're always going to get your money back one way or the other if you keep it. Now, once again, like a savings account, no plan is required to start and accumulate a long-term cash reserve with a participating cash value contract. All that you have to have is the desire to build up that income. And the decision really is to how big an asset you want to build up every year. How much do you want to put away? Again, the magic here is that every dollar you put into the plan comes back to you in one way or the other. And it's not the usual way we talk about it, but it's especially important in today's world. And importantly, it's prudent to have these plans growing concurrently because there's no need to wait for other savings to do it. And sometimes people will tell you, well, no, once I've got my RSP done, my TFSA done, and I don't have any loans, I paid off my mortgage, well, then I can buy that. That's a mistake because it's like waiting to buy your home until you have the cash. You'll never have one. It's good to do these things concurrently. And we know this, that in fact is the same as saving money. You want to save 10 or 20%, but this thing, it will help you do some of that. So it's key to remember here that in this way, cash value life insurance is an asset and not an expense. After years of payments, you will have more than just paid invoices. You will have all your money back and then some, maybe 2 and 3, and maybe even 4%. It's essential financial security when you have it, when you need it most, and you have it least. And this is really why this type of life insurance has everything to do with retirement. And I talked about whether you were approaching or appreciating retirement already. It prevents a just-in-case retirement when you don't enjoy your money because you save it just in case something happens. This sounds remarkably like my parents. And then they die, and then the kids enjoy the money. Here's an idea. You can buy cash for life insurance, leave it to the kids and spend the money and enjoy your retirement more. It can have a huge impact that way. Now, once we've got a growing cash reserve, then it's time to eliminate debts. Practice proves that it's not prudent to eliminate all debt at the expense of any savings. And sometimes I want to pay off all my debts first. You don't do it that way. That's not the best solution here at all. You want to do these things concurrently. You got to juggle a couple of balls here at the same time. Because if you save money, if you pay off all your debts and have no savings, you're left with nothing in the event of an emergency, and then you're going to automatically fall down anyway. It's proven to be more reasonable to build assets first while concurrently reducing debt. So you build them up. So you reduce one and you increase the other. That's the best way of doing this. And we all know the relief of canceling out our debts. So save and reduce debt at the same time for more essential financial security. That's just the basic banking. No, we're not even selling that, but it's an important consideration. Now, once you've accumulated a life insurance estate, you've got some of that money growing in there, you've got that term insurance, and have a physical estate, you've got some assets, it makes sense to engage a lawyer then and have a proper will and powers of attorney put in place. And prior to having an estate and absent other important family needs, cash in the bank and a life insurance policy will solve most cash needs at death. You can do it that way. Now, this is not to say in any way that this is somehow optimal. This is not the best way of doing that, but it will suffice if necessary. Remember, it's kind of like planning while protected. Wills and powers of attorney give us the security of knowing that our final wishes will be respected. So then additional insurances too. And there are others because there are other health disasters that could really cripple a family. Things like income replacement insurance or disability insurance, key to building that essential financial security. In the event you do not, you get sick or injured and you can't work, where does the money come from? Long-term care insurance, also essential too. And maybe the long-term care insurance, look, we know today that I think 86% of Canadians in a recent study are just absolutely not interested in ever going into a nursing home because, well, that's where everybody died with COVID. 96% of all Canadians, 96% of Canadians over the age of 65 never want to see the inside of a nursing home either. But you have the right insurance, the right cash value life insurance savings, you can have your own stay out of nursing home card account, so to speak, built up for yourself. Absolutely. So these are living benefits needs that are paid to us, so we never have to experience the insecurity of needing money and not having it. You absolutely need a plan for long-term medical care, and cash value life insurance can be part of that plan. It can provide you with the cash buildup you need to stay out of a nursing home like 96% of retirees say they don't want to do. So what do you want to have happen when you can no longer take care of yourself? Long-term care insurance can be your plan for that. What do you want to happen when you're sick or disabled and you can't work? Well, income replacement, disability insurance can be your plan for that. And your field agent can help you protect your lifestyle and your legacy. And then finally, as we get close to the very end here, and then of course, these are the essentials and they're covered. Now your field agent can help you with a financial plan. You've done this stuff and you've eliminated, you've minimized, you've reduced, you've avoided essential financial insecurity. Now the financial plan comes out and the extras can be added on top of that. You see, once you have the essentials in place, you've really secured the time to build on that plan in peace and know that you can do it without any trouble. A financial plan will build on your essential foundation that you've created to create a strategy and a schedule for the rest of your financial security products and services. Just like I was saying, remember, we got the essentials, we got the plan, and then we can add those extras up here. We can add those extras in peace and know we're doing the right thing. So what are we doing? They've just been able to add that on top of our essential financial security. So the extras have to do with complicated investments, often retirement planning, income planning, and those more exotic places that you can put your money, like coins and cryptocurrencies, God forbid. These are the extra financials that attract so much attention today in the media. That's what the media loves. This is the sexy stuff in the market. Life insurance is not. I get it. But it's the one that provides the security that gives us everything we need, that peace of mind we so much want. And certainly they're useful, these extras, but they're not applicable for most clients before essentials are handled. So much of the extras are, of course, are income tax related, often corporate require a good understanding of your personal risk profile. It's a more technical part of the business and requires special expertise and experience, and your field agent can help direct you if yours is a more complicated situation that can provide more complicated planning. And I refer you to him in this situation. The person that brought you to the dance is the one you should be dancing with anyway. So finally, the very last piece of this, as we get right to the end, essential financial security approach is a simple strategy to help you create the financial security that you want for yourself and for your family. It lets you plan while protected and eliminate the financial insecurity that erodes your peace of mind. You can take the what ifs out of your life, and that's exactly what we all need in these uncertain times. It's simple, but not easy, except with the help of your field agent. Hey, Sonny, that's me. I think I'm just about 40 minutes and 20 seconds.
That's great. Thank you very much, Jim. As always, very educational and entertaining. I did neglect at the beginning of the meeting to explain to everyone that we are going to be having a Q&A session. We do have a couple of questions. I just want to remind everyone, on the bottom of the screen, you're going to see a little icon that says Q&A with two little bubbles. You can go in there, type your questions to Jim. And what we're going to do is we're going to ask you to keep them very general. Please, no specific things that are talking about specific situations. We would really recommend that you contact your agent for those types of conversations, and we would encourage it actually. But for tonight, if we could keep them general, we do have a few. I'm going to introduce Mark Medor, one of our general agents from Ontario, who will be asking Jim the questions as they come in. Mark?
Thank you,
Hey, Mark,
Sonny.
where are you?
Hey, Jim. Thanks so much. Excellent presentation. I appreciate you sharing the information. I have a question. This is from a business owner who says, listen, I've got my last will and testament. Everything is good, but I'm in partnership with a business owner, another owner. Is there another type of planning that this man should probably think of?
Well, yeah, thanks, Mark, for bringing that up. It's a great question. I kind of referred once in a while to businesses and business ownership. Look, there's a real issue in businesses, and I think especially during a pandemic, about, and I guess the financial insecurity you can have about what happens if one of your partners were to pass away. And the real question really for this gentleman is, do you want to be partners with your partner's wife and her lawyer? Because that's what will happen. And it turns out, of course, and it's interesting, back in the day, Mark, and I'm sure you recall this, I remember talking about, buy-sell agreements and how have you funded your buy-sell agreement? Because it's one thing to say, well, here's, if I die, then Mark's family will buy out my wife, and if vice versa, that sort of thing. But you have to have insurance to back that up in that particular case. And that's a real important consideration for a lot of people. And so if you're a business owner, look, I was today looking, in fact, like I'm helping my daughter buy a house. And so all of a sudden, to co-sign, they need my articles of incorporation. I pulled that out, blew off the dust. Like, who looks at that stuff? Nobody, ever. But it's in there. And the stuff in my business stuff, that whole idea of where is my shareholders agreement? And in that, where is my buy sell? What happens if one of the partners, one of the shareholders were to die? Who buys out whom and for what price? You see, you can set those prices, you can do all of this, and life insurance can make it happen for pennies on the dollar, Mark. It's pennies on the dollar. And why would we do it at huge cost at the worst possible time any other way? Make sense?
Makes a lot of sense. Thank you very much. It ties into the second question, really, is about intergenerational transfers. We see these with farming, for instance, where there's one child who's involved in the farm and the other three kids, don't want to be involved. Parents generally want to be equal among all children, and so we get equalization payments. Could you talk about how to fund those and the easiest way to do that?
Absolutely. It's interesting. I've got a very good friend in this business, been around for 55 years, and he now talks about generational harmony and how he wants to leave generational harmony for the family when he's gone. And you think about how easy it would be to screw that up if you didn't do this right. You talk about equalization payments, and especially in farms. And I come from Manitoba, and I think one of my uncles had a 13,000 acre farm. Some people in Ontario go, what? That'd be like half of Ontario, it seems. But that's the example. And the money involved can be huge, which means if somebody is, if you're supposed to buy somebody out, you may have to sell half of your property, to either sell it outright or sell it to a mortgage company to afford to make those equalization payments, to keep things equal and to keep generational harmony in the family. And so the way to do this, of course, if you're a farmer and you've got that sort of asset, it applies in businesses too in lots of ways. Same sort of thing, shares, and some children go into the business and some don't, and that kind of deal. And this is where your field agent can be very helpful to you in making the equalization work and to pay for it in the most tax efficient way. And honestly, Mark, life insurance is the best way to do that. Once again, pennies on the dollar.
Thank you so much, Jim. The other one is kind of tied to that because it ties into beneficiary designations. And so, and we often hear lawyers who recommend placing the estate as beneficiary of your life insurance policy, rather than naming an individual per se. So we've got a question here is about, I've got a last will and testament. What's the impact of life insurance on my listed family members that I've maybe placed as irrevocable or revocable beneficiaries?
So there's an awful lot of math going on here, a lot of moving parts. And look, there has been a movement that I've seen in the last 10 or 15 years, particularly with lawyers starting to even direct proceeds from life insurance policies from a will, as opposed to from the beneficiary designations in a contract. Now, sometimes that makes sense. Sometimes it doesn't. But this is why, by the way, many companies today, many major companies, won't even pay out anything until they see a will, because they don't want to get into a will war over some, the will says, that Johnny and Susie are supposed to get the insurance 50-50, and but the beneficiary designations say something else. So it's important. And then this issue about revocable or irrevocable beneficiaries is also a major concern. You've got to be careful. Irrevocable beneficiary designations don't happen that much anymore, to the best of my knowledge, but they are there. And all irrevocable means is that once you've done it, you need that person's say-so to change it, which is not all that helpful sometimes. I mean, and let's face it, even Catholics, some get divorced. And in those cases, it's a very interesting and touchy subject. This is really why, and this is the value of your field agent. Why do you see this kind of estate planning, Mark, as you well know, and better than me probably, is not a do-it-for-yourself project. When things start to get complicated, you really want a field agent who then can draw on the resources of the general agent and perhaps his connections in the community to give you the best possible advice. But these are all very important considerations, and life insurance properly implemented, properly deployed in a circumstance like this makes a huge difference and cuts your costs dramatically. Because remember, even in a farm issue, some of this stuff, there's still taxation involved too. That might even prevent the people who are supposed to get the farm from getting the farm. So big issues, important, very important to speak with your field agent, Mark.
Very wise advice, especially the one where be careful where you secure your information from. Neighbors, friends, those who are not in the business of insurance or estate planning or lawyers are probably not the best source of information.
Honestly, you think about this, and in the good old days when we actually go to Tim Hortons, all that stuff, we used to sit around there. I had a friend in Milford, Saskatchewan, used to drink coffee right across the street from the pool elevator back in the day. And that was the whole thing. And they used to solve all the problems of the world. Sort of. And it's not the place. You're exactly right. Not the place you want your best advice. Your field agent is your source for that.
Thanks so much. I got another question here. It has to do with getting close to retirement. So we've got a member who's with us tonight who's questioning whether or not it's too late for him to consider a permanent life insurance solution in his portfolio.
Well, first of all, anything's possible. So you could say perhaps it isn't. But let me tell you this. When I was 60 years old and I was approaching retirement age, I brought a brand new life insurance policy. Actually, I converted one because, as I told you before, I was uninsurable in 2011. But I converted one from term to permanent insurance, and I paid $20,000. Because you see, I believe that I still have time to turn that around. And remember this, I will always get that money back. Either I will or my family will. So it's not too late. And by the way, and I talked about this in one of the other sessions about the 3 ways that prudent investors use this stuff. One of them could be long-term tax-free cash at death. And so the permanent contract can be the best way. And again, it's low, it's like pennies on the dollar. And I just did some math on this yesterday. In fact, we were showing a 10.3% return on premium to death benefit at age 90 for somebody bought at age 50. What if and by the way, if you bought at age 60 or 65, the return on premium to death benefit will be even higher. So that, again, it's not a do it for yourself project. Sit down with a competent field agent who can help you work this out. You see, one of the biggest problems we have, Mark, is that a lot of people presume that life insurance is just ridiculously expensive. And it's not. There's been research on that in the last few years. And as you know, that people think it's like, I think about 4 times as pricey as it actually is. So if you've got that question, sir, I encourage you to talk to your field agent and just see what the real deal is. Mark, he might be very surprised.
Thank you, Jim. Those are the questions that came in. I appreciate your time.
My pleasure. Anytime.
Once again, Jim, I just want to say thank you. In closing, I just want to remind everybody that this was the main event for a 3-part series. So we do have 2 other parts that you can obtain, the script, or what we call the little work booklet, that has basically everything that Jim talked about tonight. We've also recorded all the sessions. The only catch is you have to get it through your field agent. So reach out to your field agent. They'll be more than happy to do it. But talk to him, because your agent is intimately aware of all the subjects that Jim discussed today. He can talk to you about ways to preserve your wealth, to pass on your wealth, and to provide security. Once again, Jim, as a fellow Brother Knight to another Brother Knight from Hamilton, Ontario, thank you so much. Phenomenal job.
Amen. Thank you very much. I encourage you, by the way, if you want a copy of this book, you can get it at jimruta.com. This is Don't Worry, Retire Happy. Outstanding book, as you heard earlier on from Sonny. It's available. But maybe even do this. Just email me directly, because I'll give my Brother Knights a deal on this book. If you want one, please email me, jr@jimruta.com. I would be happy to give a special Knights of Columbus deal for my Brother Knights across the country.
Excellent book. I've got 5 of them on the shelf behind me right now.
Amen.
Thank you very much, everybody. Thank you for joining us. And again, once again, Viva Jesus. Have a good evening.
Yep. God bless you all.